Hello, it is Pete Birchler of StockMarketAlchemy.com here, and today is August 30th. It's Friday afternoon here, about 1:15 p.m. U.S. markets are still trading, and what I wanted to do today is really go over the outlook for U.S. bonds, government-related bonds, and also relate that a little bit to what's going on in the commodity market because there is a relationship there. That typically unfolds between interest rates and commodity prices. So first, let's start off by basically looking at the TLT ETF. So the TLT ETF is a way for individual investors to trade the bond market. So it is a long-term bond fund, very, very liquid fund. So if one was bullish on bonds, they could go long the TLT ETF. If one was bearish, they could short the TLT ETF. There is also a double leveraged short bond fund, TBT, which could be used to purchase rather than shorting TLT. And then TBF is a UBT. If we look at UBT, that is actually a leveraged bond fund on the long side. So it's a 2 times leverage bond fund on the long side. So those are some ways to play the bond market, either with TLT long or short, or using TBT or UBT, depending on what your outlook is. But if we look at the, start with a longer term time frame here, a monthly chart on bonds, we can see that off of this recent high last year in 2012, we've seen some significant decline in the bonds, and if we look at the stochastics indicator down here, we can see stochastics, both %K and %D, are back below the 20 line. So it's oversold on this time frame. The last couple time frames we've seen that get oversold have been great buying opportunities down in this range here and then at this range here. So just based off of the fact that bonds have been in a long-term uptrend, I think this is an area to watch for a buying opportunity of at least a intermediate term nature. Now, what I'm going to do is show you some information here that suggests that the long-term trend has probably begun to shift to down in bonds. So I'm not saying this is necessarily a great investment opportunity in bonds here, but it's one where I think, given we're seeing this reversal candlestick on the monthly time frame where it's come down here and come back up towards the upper end of the range, and we have the stochastics oversold, I think we could find some support here. Now let's move into a weekly chart on TLT, and we can see that on the weekly chart, this line here represents the projection of a head and shoulders top pattern, a typical textbook projection. So here we have a left shoulder ahead and a right shoulder potential chart pattern. This would be the typical minimum target based off the chart pattern, and we aren't there yet. It doesn't mean we have to get there, but that's something to keep in mind. Now, looking at this indicator here, this is a momentum indicator, and what we can see is on this recent decline here in bonds to this low is there's a mild divergence pattern showing up, meaning prices have gone lower the last couple months here, but the indicator has actually made a higher low. So we have a bit of a bullish divergence here on the indicator relative to price. So that could be forewarning that the market will attempt to rally here. Whether that rally turns into something major or just a brief couple week spike up, either back towards the support line of the moving average channel or even up higher over the course of a few months to test the neckline, I don't know. But some signs here that we do have some waning of this downwards momentum. Now, if we look on a daily chart, we can see that there's been this pretty massive bullish divergence here since July. So as prices have gone significantly lower, fallen from the 107 and 8 region down here to the 102 region, we've seen the momentum indicator make higher lows. We've also had a breakout of this moving average channel here, so prices have been trading above this green line consistently, and we're getting to the point where we may see momentum cross above the neutral line. So those would be other indications that as of currently we are on a daily time frame uptrend here, given the divergence pattern and the breakout. So those are some of the key factors we look for at a trend shift, is for a divergence pattern to show up, and then some type of confirming technical signal. And there are many different signals that could be used on different indicators, but something to actually give us a trading signal here. All right, so that's what I'm seeing on this time frame here. As far as the long-term view here, short to intermediate term view here, we would look at this point here as being a stop loss point if one was long bonds, but the reward in my estimation may only be up into somewhere below this neckline here. That might be the realistic reward on the daily time frame, is looking back up in here to the 110 to 115 range or something to that effect. Now on a long-term basis, what we're going to do, instead of looking at the bonds, we're going to look at interest rates. So the charts are going to be upside down. So in this case, we're seeing bonds fall, but in that same time frame, if we go, and I'll show you a chart in just a minute, if we look from the beginning of May, we're going to see interest rates rising because the prices are inversely related. So first off, let's go to the long-term. Let's look at a weekly chart here for a minute of long-term interest rates. Okay, so this is a weekly chart of the 30-year Treasury yield. So this is the actual interest rate yield. And if we zoom in here and look back at the beginning of May, we can see that interest rates have been rising sharply since the beginning of May, while bonds have been falling. So there's a inverse relationship there. But what I want to point out on a longer-term basis here is we're going to go back to a monthly chart. And so this chart is going to show us all the way back to the 1970s, the interest rates. And we can see that the interest rate was up around 15% back in 1981. And since then, we've seen interest rates, long-term interest rates, fall all the way down to around 2.5% here as of 2012. So this is on 30-year interest rates. And what I want to point out here is that these rallies in this long-term downtrend represent, the major bullish moves in a downtrend. And when we see a larger and faster, or larger and more time-consuming move after an extended trend, those are hints of a trend reversal. And this is these are concepts I teach in my Trader's Crystal Ball e-course. That if you go to my website, stockmarketalchemy.com, or go to the links below this video, you can get that free e-course emailed to you. And the point of the course is not really that we have a crystal ball and we know what's going to happen, but there are certain principles based on market psychology and price action that are going to really give us a great insight as to what the likely future direction of prices of any market are. And so one of the things we noticed here is coming off of the 2008 major low in interest rates, we saw this spike up here, and that was larger and faster than any move in this long-term bear market in interest rates. And we saw then a double bottom here between 2008 and 2012, so it just clipped those lows in interest rates and then is reversed, and then we formed this head and shoulders bottom pattern here off of between 2011 and 2013. And we had a massive, wide range breakout of that neckline on the long-term chart here. So this is something where I think, based off of the double bottom chart pattern, the head and shoulders chart pattern, if we were to throw some technical indicators here, we would see there's a significant divergence between this low and this low here, that there are some indications that we've probably seen a relatively long-term low put in place in the bond market. Now, as far as some projections here, if we just look at a standard head and shoulders pattern chart projection, we could take the head to the neckline projection here and project that up from the breakout point of the neckline, and that would put us back towards the upper end of this long-term channel. So that would put us back up somewhere around 4.5% on interest rates, and we're currently at around 3.7%. So that's something to be mindful of here. What I think would be an ideal opportunity for shorting bonds or going long interest rates would be for some type of consolidation here above this neckline, some type of pullback to test the neckline, and look to go long interest rates or short bonds at that point. So that's something I've seen on the long-term view. Now what I want to do is also look at a 10-year bond chart. And this is a little bit different in that these blue lines right here and here represent the largest rallies in this long-term bear market in interest rates. So going back to 1981. So what I've done is I've placed projections equal to these lines here off of the recent low in 2012, and we can see that the current move up in interest rates is larger than either of those. So coming off of a major low, we have now a larger move than any of these other moves. And I think that could be, again, indication based off of, again, if you look at this long-term channel here, we can see this major spike below the low of the channel, and then we see a head and shoulders bottoming pattern, we see a breakout, and we see it now a larger, in percentage terms, rally than any rally in the last 30 years or so as far as bonds goes. So I think on a long-term basis, these are some indications that the trend is probably shifting to up in interest rates and down in bonds. The question is, what to do based off of that information for investments. Well, I think that the indication would be that bonds are not going to be a great investment over the long term here. Obviously, they've already gotten hammered quite a bit, but especially if we do see any type of pullback here in interest rates corresponding with a rally in the bonds. So if we move back to a weekly chart on the bonds, so if we do see some rally in the bonds, if you didn't already exit bonds based off of some of the information I went over the last year or two here, then that may be a time where you would want to get out of bonds on an investment basis, with anticipation that we could see some multi-year declines in bonds after this major bull market in bonds and low interest rate period over the last number of years. So that's my basic take on the multiple time frame look at the bond market here. Now what I wanted to go over briefly is show how that relates to commodities, because if we were to look at a chart of interest rates, which I'll show again here, 10-year interest rates, the price of commodities will tend to track the price of interest rates. So what I'm going to do is show a chart here. This is on stockcharts.com, and the candlesticks on the chart are the price of the interest rate yield on the 10-year note, and the black line here is the CRB index, so the commodity index basically. And you can see that they basically mirror one another. So as interest rates are rising, commodities were rising. As interest rates were falling, commodities were falling. We see them consolidate together, fall together. They've since this past year had a little bit of divergence, but they've still followed the same pattern, rising, consolidating. Now we've seen interest rates rise pretty hot in comparison to commodities. So what we might see happen here is we might see this start to fall back in line where they mirror each other. So we might see interest rates cool down a little bit, and we may see commodities push up a little bit, at least over the next several weeks or several months here. So this is something to be mindful of. And one thing I wanted to show here was a chart pattern set up in the commodity ETF DBC, and this is a pattern that is just a beautiful example of what I teach in my integrative harmonic trading course, which if you haven't checked that out and you want more information on that, go to the link below this video for harmonic trading course and read some about that. But to give you a little taste of the type of patterns we look for here, I'm going to show you a pattern on this symbol DBC, which is a commodity ETF here. So let's look at DBC. And what we're basically looking at here, we'll go out to a weekly time frame, is this is back in 2008, the highs in commodities. This is back at the 2011 highs, and we saw about a year and a half bear market in commodity prices here. And then we saw this large rally here in the middle of 2012. And since then, we've seen this corrective type of pattern, and I say corrective for a couple of reasons. One of the key concepts I teach you in the Trader's Crystal Ball e-course is to use what's called price logic. And whenever we see a strong directional move followed by more overlapping, more time-consuming, and smaller price move, we're typically looking at here's the direction of the trend and here's the direction of the correction. Then another thing that I teach in my how to short selling stocks video is kind of a basic setup of when to short sell. Now, when we're looking at long patterns like this, when we're looking at bullish patterns, you just kind of flip those concepts upside down. And what I want to do is go into a daily chart to look at this. And here's the point. Here's that large move up. Here's the correction down. And at the bottom of this correction, we saw price going lower here relative to here. However, we saw the momentum make a higher bottom. And that divergence at the end of the pattern inside this green box is based off of a database of hundreds of patterns that I've studied in my research into these harmonic patterns. This is where you would expect the majority of patterns, successful harmonic patterns, to bottom is inside this box. So we saw price come down, bottom inside the box, form the divergence pattern, which is required for us to have some confidence that there is a trend reversal happening. We've seen a break out of this trend line here. And so this is just really an ideal buying pattern for commodities over the long run here. So I think that we may have seen a bottom in the commodity indexes here. And if we were to go and look at some gold and silver charts, we've seen a pretty massive run up over the last few months or last several weeks in gold and silver. So we're probably going to see the commodities hold above these commodity index lows here from June. And as far as if one was not long commodities already, I think if we see any type of consolidation back into this 26 and a half region here on this DBC fund, that would be an area where we could look to be a buyer. Here's obviously based off of the charting. Here's some horizontal resistance at this, horizontal support at this prior high from July. So if we see the market come back and test or consolidate above that level, that would be a time where we could look to be long with the stop below this level. These type of patterns show up in any market and on any time frame. I just traded one that I may go over in a video here over the weekend on the US dollar relative to the Swiss franc currency pair. Worked out beautifully. These type of patterns show up in individual stocks. They can show up in commodities. They can show up in currencies and those type of things. So basically what I do in my integrative harmonic trading course is teach you how to identify objectively these patterns, teach you objective indicator strategies to actually base your entries, stop movements, and exits off of, rather than just having kind of a visual type of recognition. We're going to have a visual recognition, but it's going to be measured, and then we're going to have objective signals to actually make trading decisions off of. So again, you can look at the links below for more information on that. But based off of the fact that the longer-term interest rate current seems to be turning up here, based off of what we went over, I think we could see to some extent an intermediate to longer-term move higher in commodity prices as well, since those will tend to mirror each other as far as the longer-term correlations. If you are looking to take advantage of these potential price moves, then you would want to be eyeing up certain commodities or commodity-related stocks or ETFs to be long on here. There's one I just posted an update on the members area for people who take my integrative harmonic trading course. There's a blog format I use there to post trade opportunities and setups there, and there's one I posted in relation to a gold stock today, and some of those may be coming into the subscription harmonic trading stock selection service that I use to actually give subscribers a way to take advantage of price movements based off of these patterns here. So that's all information you can look at about in the links below on these videos. If there are any follow-up questions in response to this video, then just leave me a comment either on YouTube or on the blog at stockmarketalchemy.blogspot.com, and we can get some more information out there. That's all for this update. Have a great day and all the best to your trading.